Hello everyone and welcome back to Sudden Wealth. Can't believe it or not, but we are already in February. Another week has passed by. Today is Friday, so I do expect or I do hope that you guys had a very good week. If you do enjoy the content, you already know, please drop that like and subscribe. We are about 33 subs from the magical number of 1,000. I still cannot believe it. When I started the channel in June, I wasn't expecting to grow this fast. I mean, I know that a lot of people grow fast, but to grow with such a good community, with such a great ratio of likes versus dislikes, and I don't mind if you're not growing, by the millions, but I do know that the community we are developing here is indeed an excellent and a very intelligent community. So thank you very much for all of your support over this past 7-8 months, and I really appreciate that you guys stay tuned also for the better part of the cycle. So let's go a quick rundown. Stocks pretty much driven by the excellent performance of some of the big tech names. I think Meta at some point was up 20%, which was a brutal move. It's still actually at the time of this recording is still up 20%. Amazon is up almost 8%. So extremely good outperformance of those stocks. And what's also happening at the same time is bonds are selling quite aggressively. So bonds were having a very strong week, and now interest rates rise, bond prices go down, and as I mentioned before, what is the index most affected by it? The index filled with zombie companies. Zombie companies mean those companies that were just around over the past 15 years due to a very low interest rate. And hence, they are the most susceptible to higher interest rates. That is the index, the Russell 2000. So when I made the prediction of new all-time highs by end quarter 1 2024, and I did say it was the S&P 500, the Nasdaq 100, and the Dow Jones, I specifically left out the Russell 2000 because although I knew it was going up, it is still filled with zombie companies. But what I do expect to happen as we go forward is interest rates to further come down, bond prices to further come up, and because they are the most impacted on the way down, they are also the ones to benefit the most on the way up. But still, I'm not making predictions around the Russell 2000 because that is more linked to the real economy, and in my opinion, the real economy is much worse than people think. While the S&P 500, the Nasdaq 100 is very tilted to a very strong group of companies, which basically can do extremely well, while the rest of the world doesn't do that well. So that's the key for my peak at that time. Now, we are seeing some escalations in the Middle East. That is worrisome on so many levels, but let's try to keep it less emotional and more on the reality side. Anything that may explode, let's say, or may develop in the short run, in my opinion, will be negative. For risk assets, eventually it will be positive because basically it gives the central banks the freedom to print. Nobody cares about inflation anymore. We need to do whatever we need to do to win whatever we need to win. And in that context, over 6 to 9 to 12 months will be actually better for stocks rather than negative, and for risk assets in general. Now, shifting to Bitcoin. By the way, one thing. The month of January was positive for the main indices. Typically, they say the way the month of January goes, the rest of the year follows. I've never done the analysis to actually check if that is really the case, because otherwise it would make life easy for everybody. But in any case, it's a saying. Take it as it is. And for all of unfortunately, the Harry Dents of this world and the Peter Schiffs predicting the end of the world, it seems that still not that time. But in any case, it's going to be a very volatile year. I've said this before. I mean, even January was very volatile at some points. Expect that volatility to creep in, to expand, and to get much, much worse. Now, typically, the more people move, the worse they get. So if things are moving too out of your control, not financial advice, but maybe consider stepping aside. Stepping aside, what I mean by that is just relax, just try to relax, try to think 5, 10, 20 years into the future and not so much into the past. Now, one thing that I heard in the Fed meeting that I really liked was they were talking about stopping QT. Now, if you've listened to my previous video, I said there are two things that I wanted to see this year because those have implications much more important than anything else, which is the Fed talking about QT, not cutting interest rates. QT means stop selling the bonds, which they've done. So tick for me, one of them. The other one that I would like to start seeing is increases in productivity in the job reports. Why? Because this should be the year where artificial intelligence starts to creep into these reports. And as you know, I'm a big enthusiast of artificial intelligence, and I do believe it has the potential to completely change our society forever, for better and for worse, need to be said clearly. But I would like to start seeing some of that productivity creeping in. So something to pay attention. One of them I wanted to happen, which was the Fed talking about stopping QT, quantitative tightening. For people who don't know what that is, that means the Fed selling bonds in their balance sheet. So you need to imagine the Fed selling bonds, the Chinese selling bonds, the Saudis selling bonds, the Russians selling bonds, the Treasury to finance deficit selling bonds, and the Fed, which used to be the biggest buyer, also selling bonds, right? But by stopping the QT, it gives the impression that they are about, or they would look to start buying them again. And as if you follow this channel, you already know, stable bond market, it's much easier for stocks to go up. Let's put it that way. Now, moving into the crypto space, Bitcoin closed the month below 45,000. Now, in order to be in line with the cycle, we should have pumped higher than 45,000 throughout January, which we did. 49,000 is substantially above 45,000. But, so in theory, we ticked that box. However, I would have hoped for a cleaner close of the month, which would be a 46,000 closure. I wasn't predicting it. What I'm saying is I would like to have seen it, different story. And I would like to see a bit stronger Ethereum also. But we are still technically within the boundaries of the cycle. However, not the cleanest of the cycles, okay? Which, I mean, to be honest, is also not that big of a deal in the sense that if we would repeat to the day or to the hour all the cycles, well, then everybody's aware that then a lot of people can front run a lot of things, and those things are destined to not repeat. If you see what I mean. If everybody is too focused on something, that tends to stop happening exactly because it becomes a self-fulfilling prophecy. Now, one thing that happened here is funny. Was I was talking about my retirement coins, in case people don't know. Pulse Chain, Pulse X, both on Ethereum and Pulse Chain. Hedron, both on Ethereum and Pulse Chain. Icosa, both on Ethereum and Pulse Chain. And I was talking about coins and said, look, typically, because people ask me, okay, which ones do you buy, etc. I say, I usually buy the ones that have pumped the less or have dumped the hardest. That's how I try to go. Now, I try to prioritize cycle 1 coins, meaning Pulse Chain and Pulse X, more so than X, just because X is a cycle 2 coin. That doesn't mean that I think it's a bad project or think it's going to go. No, I just think that the other ones have more potential because they are cycle 1 coins. And I was giving examples, and I was saying, look, Icosa has outperformed everything. X outperformed everything, the other coins in the beginning. Now Pulse X was outperforming, and the incentive token was outperforming, and Icosa was outperforming everything. And I said, look, Hedron is slightly underperforming. Maybe Hedron's going to be the next one to pump. 2 days later, Hedron pumped something like 50% or 60%. It was quite funny. Just as soon as I said that, 2 days later, that happened. Now, am I here? Oh yeah, I knew it. No. What I'm saying is, this is why I have an allocation to all of them. You see, I don't try to play this game, okay, which one's going to pump first, which one's going to pump second. No, if I have all of them, I don't need to be playing here. And when people start to try to ratio trade, meaning go from X to Hedron or Hedron to Pulse and Pulse to... When people start to complicate things too much, things people tend to trade themselves into losing half their bag just on the ratio trading. So that was my point. That's why I hold them all. You see, I hold them all. So if one pumps, I'm happy. If the other one pumps, I'm also happy. If this one pumps, I'm also happy. If that one, that's the point. In my opinion, you need to understand. Hedron and ICOSA is for people who believe in X, because they are natural leverage on X performance. So if X does very well, Hedron and ICOSA will do better than X. But if X does bad, then Hedron and ICOSA will do worse than X. That's the point. Just a little bit like the stock market. If S&P 500 does well, the Nasdaq tends to do a bit better. If the S&P does badly, the Nasdaq tends to underperform. Same thing. There's no big conspiracy. It's just how the products work, how the liquidities are linked, and how the functionality of the projects are going. Now, I am seeing a lot of influencers on Pulse Chain popping up. In my opinion, in general, that is good. However, be aware for the people that just came after the pump. You see, there have been a few of the influencers that have been here the whole time when things were not so easy. And the reason why I'm saying this is, on one side, they do bring visibility to the projects. On the other side, do they really believe the projects, or they are here just to leverage on on coins that are becoming popular? I don't know. I hope for the first one, but be careful if you start listening to trading courses, membership fees, Discord fees. I mean, you do whatever you want, right? If you want to pay for those things, sure, go ahead. God bless you. It's up to you. Who am I to tell you no? But be very careful, because this is what was one of the things that actually I predicted, which was when we start to pump, a lot of YouTube content creators will start to pop up. But not when it's difficult. Not when PulseX was 5x cheaper. Not when ICOSA was 7x cheaper. They come after the pumps. Now, hopefully, I believe we are still extremely cheap. So, in theory, they are still early. But here is the point. We were in the desperation phase. That is the bear market. Then we are in the doubting phase. That means we start to pump a little bit, but every pump we have is followed by a sell-off. Because people remember very well what happened in the bear market. They are traumatized. So they are in a disbelief phase. They don't believe the rally. They think the rally is a trap to get them excited and then just dump on their heads. Now, when you have sustained pumps above the dumps, so even when we dump 50%, we are still way above than where we were, and we pump and the dips last less and less time, people start to enter into the next phase, the optimism. Or maybe we are over the worst part, and now clear skies are going to be ahead of us, and maybe this thing is going to do a nice 50x and I'm going to be happy. So that is the being happy phase, if you will. Then comes the drunken euphoria phase, which is, this is going to replace the dollar. Richard Hart's going to be the president of Mars. The world will all swift to X at the same time and use Pulse Chain for everything. The United States will accumulate Pulse Chain as reserves. All this kind of crazy stuff. That's the euphoria phase. Everything that comes on Pulse Chain goes up 100-fold. Blah blah blah. All the projects everything is 100-fold. Pulse Chain went up 250. It's gonna go another 10x from here. All in all. That's the euphoria phase. That's the drunken sailor style of phase. And at that moment, I'll be probably the one raining a little bit on the parade, saying, hey guys, starting to see too much craziness around this. I love the products, don't get me wrong. I have mad love for them. I'll probably tattoo all of them on my body when this is over, but be aware, that when you start to hear things like this, most likely than not, you're close to the end. You see, the other influencers will tell you to keep buying because this is going to go to 1,000,000-fold, and because they are printing money, and because they are doing this and that and the other. And I'm going to be the one telling you the truth. Why? Because at the end of the day, I will actually not need your money, because if we get to that euphoria phase that I hope we get, and we get a damn good one, I don't need your money. That's the point. And with that, guys, I'll let you be. I hope you have some plans for the weekend. Have some fun, and I'll catch you in the next one.